Sorry, just unhook my telephone while I start this broadcast. Today is 8th of March, the World Women's Day. I am bowing deeply in front of every woman. I love women. Uh, I like them as business partners. I like to be around them. I think they enrich our lives and they deserve equality, respect, and protection. So, congratulations, women, and I wish I lived in a world where every day is Women's Day. This, unfortunately, is the only positive thing I'm going to say. This picture will probably tell you where this video is going. It is the perfect storm. Yes, unfortunately, we're going to talk about the perfect storm facing Turkish economy. These also happen to be my second quarter forecast for Turkish economy for all those who care. But first of all, autocriticism. I mean, I have been doing the Real Turkey channel, obviously, with my friends, allies, and guests for over a year, and I don't think I have ever said anything positive about the Turkish economy. Maybe once about the Black Sea natural gas discovery. And of course, since you don't have the time to see whether my forecasts are coming true, I need to do that myself. To some extent, yes, I think Turkish fundamentals have deteriorated significantly since I began the English language Real Turkey channel. Inflation has become a huge problem. It's currently, officially speaking, at 15%. GDP per capita continued its decline. In fact, at the end of 2020, GDP per capita dropped to a 16-year low. This is in dollar terms, by the way. Turkey has shed massive amounts of employment, partly because of the COVID-19 epidemic. I hope I don't get demonetized for saying the word, but partly because structural shifts in the Turkish economy. We simply can't keep up with technology and new trends. I was wrong about growth. Turkey's official stats agency, Turkstat, reported real GDP growth of 1.8% in 2020, which gave our beloved government the opportunity to advertise the fact that Turkey and China are the only countries which managed to close a horrendous year with positive growth. Turkey and China also happen to be two countries which fudge their data. I've been in this business for 30 years. I've never seen anyone who trusts China data. Turkey is even worse. Perhaps I will do a separate video about the inaccuracies in Turkstat's measurements, but let me say this. In a year when electricity consumption was stagnant, Turkey lost close to 1 million jobs, we managed to produce GDP growth. How is that possible? How do you produce something without electricity? How can you increase your total production when you have shed such massive amounts of employment? Did we suddenly discover new technologies that allowed us to produce more with less labor? Perhaps aliens visited President Erdogan and they gifted him this wonderful technology. And if that's the case, then in a few years, nobody will be working in Turkey. Anyhow, joking aside, I don't think I was wrong in terms of growth. I think Turkey is in a recession, but hey, unfortunately, I can't prove it. But why am I being pessimistic about the second quarter? Let me just show you our new cover page. I'm going to add more graphs, charts, and animations, hopefully. Well, for one thing, the official data shows that in January and February there were, visible and steady signs of deterioration in economic fundamentals. The major reasons are, well, at home, we switched to something called controlled normalization. Uh, that's sort of like being semi-pregnant. I don't know what controlled normalization means. Apparently, it's step-by-step opening of the economy based on the number of cases per capita in every given province. We have 81 provinces. That began on 2nd of March. Since then, cases just blew up. They went off the chart. I'm really sorry. Fortunately, only very few people are dying, and most of these cases are mild, but they're infectious. Um, the opening meant that restaurants, bars, cafes, gyms, saunas, football pitches that have been closed for 4.5 months have been reopened, subject to conditions, of course, social mobility and social distancing measures. I think this decision was made not based on scientific criteria or sound health advice, but simply because the government doesn't want to pay for the additional unemployed. It has a very small welfare budget. I think Turkey is, um, along with Chile, I believe, at the bottom of the league in terms of welfare payments or financial support payments to those affected by COVID 19. Cash payments as a percentage of GDP are less than 1%. I mean, yesterday, Biden and the Congress passed a law for financial support, which is as big as Canada's GDP. And here we are not giving any money to people. But the problem is, of course, we don't have enough vaccines. Vaccination is very slow. Only 9% of the country has received their second doses, first and or second doses. And we only have the Chinese Sinovac vaccine, and delivery schedules are very uncertain. So, as far as I'm concerned, unless we radically change our public health policy focus, Turkey is stuck with a third wave. Cases, in my view, would accelerate from 11,000 per day to 20,000 per day, and curfews and shutdowns will have to come back. That would be devastating to millions of small merchants, owners of kiosks, grocery stores, carpet sellers, etc., etc., who would definitely face insolvency this time. And of course, even the smallest shop hires at least two personnel. So if my estimate is Turkey is going to lose at least 300,000, 400,000 small businesses, which means including the entrepreneurs, we're looking at additional unemployment of 1.2 million, which means bad loans in banks will increase. But more importantly, from an economic viewpoint, people who have lost their jobs, whether they receive dole, that's welfare payments or not, are going to cut their consumption. And since 60% of Turkish economic output is derived from consumption, that automatically means stagnation. I could end the video here, or if you are busy, you don't have to watch the rest. But that's not all. Turkey, I mean, this is a mistake that the Turkish government made, but the perfect storm analogy comes from really from conditions that over which Turkey has no control. And there are three of those. Obviously, the rise in American bond yields and the concomitant increase in the value of the American dollar. How is that bad for Turkey? Well, Turkey is one of the most heavily indebted countries in FX, foreign currency. Within the next 12 months, Turkish businesses and banks will have to refinance $180 billion. On top of that, we'll probably have a current account deficit, depending on oil prices, anywhere between 20 to $40 billion. You put two of them together, in the next 12 months, we need to borrow at least 200, maybe $220 billion. Even if our credit rating was perfect, credit score was very high, the rise in American bond yields and the rise in the value of the dollar index means this will become more expensive. And in fact, when you have a lira that constantly depreciates, the Turkish lira cost of borrowing abroad just soars. What is the result? Well, the result is Turkish companies and banks will have to borrow less simply because they can't convert this profitably into fixed capital investments or into Turkish lira loans, which means they'll have to pay some of the maturing debt, which will put pressure on the Turkish lira. Secondly, of course, oil. Turkey is not as dependent as important energy as it was, for instance, 5 years ago. I always criticize the government, but one thing they did well was to develop Turkey's renewable energy sources. I am against hydropower plants because they pollute the environment, but we have made massive strides in wind. We're beginning with solar, and most importantly, we're tapping our geothermal potential. And renewable energy is going to explode in Turkey. But the fact is, we still do import a lot of energy, and most importantly, you may not notice, but if you're an energy importer, you're also a petrochemicals importer. All of your raw materials for plastics and even medicine come from abroad. So, the burden of higher oil prices or energy prices on our foreign deficit will increase over the coming months. I really, I see forecasts of Brent oil, which is what we use, going up to $100 per barrel, and I think this is ridiculous. It's just not going to happen. But I think for the second quarter, before we find out how fast the world economy is going to recover in permanent terms, oil could possibly test $80. But even if it stays at $70 per barrel, it's still a major burden on Turkish economy. It's going to make current account deficits worse. Now, obviously, you can compensate for that by rising exports, but unfortunately, half of our exports go to EU, and EU is going to stay in a recession. That's the official, viewpoint of European Central Bank, European Commission, etc., etc. So our exports will increase very slowly, or maybe remain stagnant. On the other hand, since oil demand, energy demand is very inelastic, we cannot really cut our imports. So that's a big problem for current account deficit. Then you have a weak lira because of rising American yields and rising dollar index. That also adds to inflation. The third shock is world food prices. Food scarcity and food security are going to be very important concerns this year. I mean, not for the United States or UK. You may see your food bill go up by 2, 3, 4%. Of course, it is important, but it's not lethal or crucial, because food is a smaller part of your budget than the average Turk or the average Bangladeshi or Pakistani. In Turkey, food constitutes 1/4 of the consumption basket. And since food prices go up, obviously food inflation is going to drive up the entire CPI behind it. There's another problem. Turkey is suffering one of its worst droughts of the last decade. In February only, average precipitation declined by 50% vis-a-vis last February. Since 70% of Turkey is on dry farming, which means we rely on rain to produce a crop, grains and legumes are going to be hard to find. So inflation is a second problem. So we have oil prices rallying, we have food imports becoming more expensive, we have the increase in dollar depressing the value of the Turkish lira. What are we going to do? Well, in terms of inflation, obviously, the central bank usually raises interest rates, which reduces domestic demand and the current account deficit and inflation with a few months lag. But that's kind of difficult in Turkey for two reasons. First, our president doesn't like high interest rates. Neither did Mr. Trump. But Fed is independent. Turkish central bank isn't. It essentially does what Mr. Erdogan tells them to do. But the second and more important reason is that even though our real interest rate is very low, the corporate balance sheets are so weak that whether they can tolerate higher financing costs is a big question. This is called financial stability. When you raise interest rates, obviously the private sector will have to borrow at a higher cost. But remember, it's not producing any sales. It has just shed tremendous amount of employment just to stay alive. And now its FX debt has become more expensive in Turkish terms. So, I'm not saying our new governor, Naci Agbal, will not raise interest rates. It certainly is good for the Turkish lira and inflation. But weighing the overall risks, I think interest rate hikes could be as damaging as higher inflation. At times like these, you use fiscal policy, belt tightening, austerity. But by definition, that's wrong and very difficult, simply because even IMF is telling the governments to spend more on the poor, the unemployed, those small businesses facing insolvency, so that we don't develop long-term scars, we don't lose muscle tissue in the economy. And already the Turkish government is spending very little on the poor and on the bankrupt or near bankrupt. So you really can't cut the budget until you stamp down the epidemic, which is not going to happen in the next 3 months. You can raise taxes, but that's inflationary too. So essentially, Turkish fiscal and monetary policies are stuck. Our policy levers are rusted. There is not much we can do to deal with the impact of these external shocks, namely higher inflation and current account deficit, which means the burden of adjustment will fall on Turkish lira and on domestic consumption. This is why I expect Turkish economy to shrink in the second quarter of the year. Let me just summarize where we stand, and let me just bring back the cover here so you can follow. Just a second, you can follow my presentation better. I think after a slowdown in the first quarter, Turkish economy is going to shrink on a quarter-on-quarter basis in the second quarter. I think the Turkish lira will depreciate for the time being. It's difficult to give a level. A lot depends on oil prices. I mean, if oil is really $100 per barrel, Turkish lira will sink like a lead balloon. And secondly, it depends on whether our governor, Mr. Naci Agbal, raises interest rates or not. Obviously, if interest rates are raised, then the depreciation of lira will slow down. I'm somewhere in between. I simply say, look, don't expect stronger lira, okay? I read a lot of investment banking research who are extremely bullish on the Turkish lira. Some claim that the dollar TL exchange rate will decline to 6.3. Today it's at 7.5. And I think in the second quarter, a fair range would be at least 750 with an upside to 8. That's dollar TL exchange rate could test the 8 level. The current account deficit is going to be a major disappointment. I expected very low growth this year, which should also narrow the current account deficits. It will still happen in the second half of the year, but I think in the second quarter, even though domestic demand is slower, we will see current account deficits expanding on a month-on-month and possibly even on a year-on-year basis. Inflation, and that's really scary. I think 20% headline inflation, CPI inflation, is not out of question at this point if oil and imported food prices continue to increase and the lira depreciates as I forecast. Okay, well, I'm hoping to have better forecasts in the summer months. I'm hoping that I'm wrong about the epidemic. But all in all, in the foreseeable future, Turkish economy is going to do worse than it's doing today. Once again, it's 8th of March, World Women's Day. My sincerest congratulations. Women enrich and enlighten me every day, and I remain forever grateful to all the women I've known all my life. This is Atilla Eşalara saying goodbye for Real Turkey channel from Istanbul.